This is an incoming transmission from the Jersey Shore.
This is Financial Insanity with Scott McLean, powered by McLean Advisory Group. Today you'll hear some of the most important financial information and wealth-building techniques available anywhere.
Let's get this party started, huh?
Do you have a question for Scott and the team?
Am I on the air?
609-488-4646. That's 609-488-4646.
We'll get that information to them by radio.
Now, Financial Insanity with Scott McLean.
Hey, welcome to Financial Insanity with Scott McLean, McLean Advisory Group. I'm Alex Dingman, and today Scott and I have a special topic. Kind of sounds like it's straight out of a video game. Now, this idea came from one of our faithful listeners. Thank you so much, and always send those thoughts in if you have them, 609-488-4646. But this person wanted more clarity on bricks. Now, let's jump into the world of bricks. Now, not the kind that we're building houses with, but something that could change the way some big countries play the money game. So first, Scott, what the heck are we talking about when we're saying bricks?
I'm glad you brought that up because, Alex, imagine Brazil, Russia, India, China, South Africa sitting around a giant monopoly board deciding that they want to start using their own monopoly money instead of the game of standard currency. You see, that's BRICS for you. A group of countries teaming up and using their own currency instead of relying on the U.S. dollar, which is now very strong and very well. But, of course, the world's go-to currency, which is the USA, since World War II. That's a lot, Alex.
Well, that is really interesting, and I'm just kind of trying to think about this, those countries that are involved, interesting, but it sounds like it's kind of like they're coming up with some sort of secret club, some sort of members-only deal, secret handshake and all that, but why are they doing this, Scott?
Yeah, special...
Yeah, exactly.
Knock on the door.
Exactly.
Yeah, so you think, Alex, it's like when you and your friends decide you'd rather trade stickers instead of Legos. These countries think that creating their own currency will make up trading, of course, among themselves easier. That's been going on for a while. This is nothing new, and I've gotten some calls from clients. And, of course, I thought, Alex, let's face it, it's always fun to shake things up and to try something new, especially, if you could have more control of the game. And that's what we're seeing right now.
Yeah, and
who's going to get control?
And I can see how that can make a little bit of sense. So it's kind of like a gamer deciding if they're going to go on console or PC, and people are going to have strong feelings about either one. But how does this really affect the people that are listening and they're saving up for something big like buying a house? How does this information affect them?
Real bricks, buying a house. That's the spirit, Alex. I think about, even though the countries are planning their own currency party, it doesn't mean our dollars will turn into pumpkin carriage at midnight. I think that's what one of the listeners called up, and he says, Scott, how will that affect us? What's going on? You see, the U.S. dollar will still be the currency you'll be using to buy your pizza pies and your Easy Bake Oven for your grandkids. The BRICS currency is like adding another controller in the game. It really doesn't replace the existing ones right now. Could it change? It's possible, but not right now.
And if you have questions about this or any topics that we discussed, that number for Scott McLean, his wonderful team, McLean Advisory Group, here in Waretown, but serving New Jersey, 609-488-4646, 609-488-4646. So no reason for people to panic here. It sounds like BRICS more about choices on the global stage than anything else, but what should people be focusing on with the talk of this new currencies? What is relevant?
I think, first of all, is relaxing and understanding really what's going on. While the world really does its thing and trying to figure out how can they usurp the U.S. dollar, we need to keep our eyes on your own financial health. Those of you out there, how are you faring out? How is your investments doing? You're checking your savings. Are you managing your budget? Is your interest, are you getting the best interest rate you can in your bank accounts, which we had a call with one of our clients this morning before this call. And really, as you build towards your own personal goal, your retirement goal, whether it's selling your house, getting a new house, going on vacation, or just maybe another big investment, focus, for you listening, listen, focus on what you control, not what you can't control. And you'll be set in a matter of currencies is in your wallet right now. Now, that doesn't mean your advisor shouldn't keep you up to date. Obviously, we should keep our clients up to date. Right now, it's no big deal, but it is in talking matters, and that's what we can control. What's going on? And that's why at our firm, we look at the 3D process. How can we really help our clients be as safe or as well informed as possible so you can enjoy your retirement?
Well, and Scott, one of your great values, too, is you're able to take this information and really put it in perspective for folks. And so this faithful listener, they wanted this information out about BRICS, so they called in asking for more, and we're going to do this today. But that's really, one of your main values, Scott. Speak to that a little bit about, you're somebody who can take this information, whether it's the, national economy or we're talking here about the global economy and, on a world scale, but you're able to put this into perspective for folks and let them focus on what really matters as opposed to just hearing these things and maybe, going exactly to, the doom and gloom thought process that so many of us can do and we just don't have the answers.
And you're right. I think if you're older like myself, you remember 2000 to 2002, the market dropped almost 55%. Then 2007 to 2009, that was a cataclysmic tummy ache. A lot of people bought a lot of booze and a lot of Pepto-Bismol because they didn't understand what's going on in the market. So I get the understanding is our dollar going away. I get it understanding what's going to happen to our currency. I get it saying you're worried about your family. And then, of course, what about your kids and grandkids? I can't speak for that in the future. I just have to keep my eye on what's happening now and what the political position is. And we'll know more later on as we see the political showdown coming up pretty soon with the new presidency around. But I think about the BRICS and I guess the biggest thing, Alex, people's out there, are you doing your financial planning? Are you doing your budget sheets? Are you addressing what's most important to you and your family? And again, I understand you're worried about the other countries that want to pull away from the U.S. And I think to happen overnight, I just don't see any way, shape, or possibility it could happen overnight. Now, that doesn't mean it can't.
Sure.
But I'm just saying that is just a huge transition of how we're buying our goods and services. So, again, if you've been doing your financial planning and maybe you've called our office at 609-488-4646, maybe you've asked me some questions off the air, or those of you who have gone in and texted me some information, and we want to make it wealthy. And I appreciate a few of you clients calling about the BRICS, about the dollar currency. But I don't want you to hesitate not to call our office and say, Scott, I need some information. 609-488-4646, because it's easy to put things off. It's easy to say, I'll get to it. It's easy to say, well, I'll think about it later, and it's off your mind. All of a sudden, it shows up on the TV show, and now you're scratching your head and you're worried. Guys, if you're out there, women, are you out there? You're concerned. I'm here. I've been doing this thing over 40 plus years. I've been doing this and watching what's happened. Many of us have seen the economy shift. We've seen presidencies shift. We've seen the political world as well as this crap going on in the colleges right now. It's amazing. But are you set in your finances? Can you say you're bulletproof? Are you, if the market were to drop 30%, how would your portfolio hang out? How would it do? What's the beta factor of your portfolio, the risk factor? If the beta factor is high, you could be losing more money than you thought. And that is what we talk about to our clients. So again, commit to your own financial well-being. Commit to being proactive and approaching your investments. This is why people call us so often during the week, during these shows, Alex, is when they call our office at 609-488-4646. I'm here. Now, if I don't call you back right away, I will. My staff will make it available to you. But I can tell you, we're in some different waters right now, and you probably need someone who's on top of their game. That's what I can see challenging right now. People are not on top of their game. They're just pushing products and sales, but are they educating the clients out there?
You're somebody that's never going to, judge somebody harshly or look at somebody like they're dumb for some question. I mean, not everybody can be expected to know all these things, and like you and your team does. And so give that number out again and just encouraging folks, if they do have questions, concerns, that they can come see you and your team.
I'd love to hear from you. If you're out there, if you got questions, we'll get the answers if we don't have them. How's that? And I can tell you, if you give our studios a call, 609-488-4646. Any questions good and regarding the finances and your situation? Perhaps if you'd like to say, Scott, I need to know how we sit in our situation, my wife and I, or maybe you're single or you have a partner. How do we sit? How can we reduce taxes? How can we make our money last a good long time? How do we protect our money from the crows and the clowns and if something happens to us? And then again, how can I hide my assets or reposition my assets in case the nursing home wants to get them? How do you do it? It's real simple. 609-488-4646. This is all I do, and I love it.
Don't go it alone. Call Scott and his team, McLean Advisory Group, 609-488-4646, 609-488-4646. Plenty more to come here on Financial Insanity, out-of-the-box thinking for your financial sanity.
Stop for a moment and think about this. Do you know how much money in your 401k or IRA is actually yours? Or will the government take a bigger chunk than you thought? Remember, you still might owe taxes on that money, but do you have a plan to help make sure you don't pay more than you should? At McLean Advisory Group, we believe you deserve to keep more of what you've earned, which is why we're here to help you navigate the confusing world of retirement taxes. It's your money. You deserve to know what's at stake. Right now, taxes are historically low, but they won't be this low forever. So call the McLean Advisory Group team today so you don't miss out on this opportunity. 609-488-4646. That's 609-488-4646. You work hard for your money, and we'll work just as hard to help you keep it. McLean Advisory Group, 609-488-4646. Investment advisory services offered through Sound Income Strategies, LLC, an SEC-registered investment advisory firm. McLean Tax Advisory Group and Sound Income Strategies are not associated entities.
Get all this stuff and you try to put it away like these hoarders on TV. It has an emotional attachment.
So, Scott, you're saying I don't have to keep every single drawing that my son has done? You're saying I could throw some of that away?
The answer is yes. You can take a picture, then throw it out.
This is Financial Insanity with Scott McLean, presented by McLean Advisory Group.
Today, we are discussing the Income Toolbox, all about building a stronger portfolio, one tool at a time. I'm Alex Dingman alongside Scott McLean of McLean Advisory Group. And I know you're going to have questions. Jot this number down, 609-488-4646, 609-488-4646. Scott knows better than anybody that it takes a lot of different financial tools in your portfolio to keep your retirement on track. We're going to talk today about corporate bonds and the difference later on between corporate bonds and mutual fund bonds as well, because that's an important distinction. But Scott, let's, if you would, kind of display the power here of bonds and why we're talking about this here today.
I'm so excited about talking about bonds because I think about Jack, a classic growth investor. They want to grow your money. And he rode the waves of the stock market up and down for decades, enjoying the high and the enduring lows. But, as Jack, or maybe you out there, you get closer to retirement, you start losing a little sleep. Or maybe you got that spouse of yours putting an elbow in your side thinking, every time the market takes a dip, honey, you change your personality, or perhaps maybe you lay awake at night hoping and wondering by osmosis, will the market go back up? And of course, you learn the market's up and down, and you could possibly seeing your gains turn into losses. So again, we'll use Jack. He wants to start selling his stocks because why? He needs income. Write this down: reverse dollar cost averaging. You see, when the market's down, you're faced to sell when you have this income you want. and you have to sell at lower prices, which means you're selling more shares to get the same income, reverse dollar cost averaging. You see, one day, particular volatility, if the market's really swinging up and down, not only is your personality changing, I've noticed so many times, Alex, I'm sure you've seen the seniors, their personality changes. The market's up, you're happy, market's down. I say go to the doctor and get some Prozac, but pretty much you're on your way to keeping your money safe. We need income. Tools that will pay a consistent income, whether the market's up and down. It's almost like a loan. So corporate bonds, as we talk about, it could be great. Now, imagine this: instead of stressing out about the markets up and down, you can pretty much get yourself a nice tool. You don't have to worry about the markets. You're out to dinner. You're playing with the kids. You're watching the football, the grandkids playing, and like clockwork, the check shows up in the mailbox or in your checking account, just as promised. So this could be a great tool. But those in the stock market, in the growth area, you don't understand how it works because you really haven't been in that world. And when you change from the growth world to the income world, it's a different world to understand. And it's almost like going deep sea diving. Are you used to it? Can you handle it? Can you sleep well at night? This is income, predictable. You can bank on it. And of course, this is what I find so important, Alex. People don't understand how to look at it in this time of possibly a great time for corporate bonds.
Right. Well, then that's what I was going to say. It seems like it could, take some of the stress out of investing, especially people as they're approaching that retirement, maybe want more of a quote unquote sure thing. But talk to me a little bit more. Okay, what exactly then are corporate bonds? How does this work?
Think of, Alex, your name is IBM, and you want to raise some money for some reason, so you're going to issue a bond. And you're promising to pay me, Scott McLean, or the investors online listening to us right now, in writing, a documented piece of paper called the bond with the stated date when it's due. Maybe you're going to have a stated interest rate. Let's just say it's 5%. And you must pay that no matter what, hell or high water. And you're banking it almost like it's like a loan. And so you're going to pay me twice a year as a corporate bond. So we know two things. Number one, we know the interest rates and we know when it's coming due. Now, what coming due, Alex, means really clearly, coming due means I got to give all the money back. So, Alex, if you loan me $100,000, or I'm saying I give you $100,000, Alex, for your bond, and you're paying me 5%, and the bond is called in 5 years. That means you've got to pay me a semi-annual payment 2 times a year, and at the end or the call period, when it's over, you've got to give me all my money back. So I'm just eating the interest. I call it the chicken and the egg. The chicken is the investment. The egg is the dividend or interest payment, and I'm getting that egg. So I can either eat the eggs or I can reinvest the eggs and buy more chickens. And this is what's a lost strategy in the world of investing for fixed income. And don't misunderstand this for mutual funds. We'll talk about that later. Mutual fund bonds, but understand corporate bonds could be a wonderful place, Alex.
Well, and Scott, for folks out there that
Want to learn more?
609-488-4646. Again, 609-488-4646. I'd love to hear from you.
No, thank you so much. And, one saying my mom told me as a kid was, if it sounds too good to be true, it probably is. And Scott, I know you're a straight shooter. Let's talk about the corporate bonds. We talked about maybe some of the safety there, but break down the good, the bad, maybe the ugly about corporate bonds, if you could.
Beautiness of the corporate bonds is, number one, we have to see who the company is. Let's take a look at the company and rip it apart, and let's see if they can pay the interest payment. Let's see if they have too much debt. Maybe we don't want to go in a corporate bond. Let's rip off the facade of how beautiful the company is, like General Motors. When General Motors was a big company and people bought their bond, well, remember, General Motors became bankrupt, but they got 18 cents on a dollar. They didn't get the full money back. So be careful when you're investing for corporate bonds. That's the ugly. The good, let's say it's a very strong company. My friend out there, Public Storage, or IBM or some strong companies. Well, we know that they can pay. They've got a strong balance sheet. We know that they're issuing a bond because they want to expand their business or whatnot. We're going to look at these corporate bonds and the safety of the corporate bonds. That doesn't mean they're guaranteed. It means, well, if they have enough income, that they have enough profits, they have enough assets, they could be a wonderful tool. Unlike a company called Xerox that used to be around. Of course, I think about other companies out there that could be maybe weak. Let's make sure they're strong. The good, I'm getting a check. I can bank on the check. The wonderful, I'm going to get a corporate, and after the period of time when the period is over, called the call date, or when it's ended, I'm going to get a check, like the Tiger Bond. The Tiger Bond in many years ago, which was the Treasury, was paying, listen, 13.25% guaranteed. And you know what? What a great bond that was, guaranteed by the government. So let's take a look. Again, that's the government bond, but the corporate bond, let's look at the company. The good, the steady check. The bad, if it's weak and you buy it and you get caught in hype. The ugly, they go bankrupt like General Motors did, and you get pennies on the dollar. So this is important when you're looking at fixed income, that the advisors who really don't specialize in this area, almost like a knee surgery specialty or brain surgery, you've got to really dive into the nitty gritty before you buy this corporate bond. But the good news, oh my goodness, we don't want default. That's the ugly. But the good news, the steady check. You can bank on it showing up in your mailbox twice a year.
Well, and Scott, I love your energy for helping folks and for educating people, and the knowledge that you have here about different income tools as we're discussing corporate bonds today. But you know, I can just feel it coming out of you that you know, you're just it's something that you just feel like it's really important, because it's something that you think that people are not educated enough about, right?
They're not. And unfortunately, I'm the old person in the house talking to you young people out there. What do I mean by old? You see, in 1982 to 2000, the market was nothing. Well, there's a couple dark skies, but it was blue skies. Anything you touched, anything you felt, anything you smelled, anything you invested in, it made money. So who the heck wanted to buy a smelly, yucky bond? Bonds are boring, Scott. I'm getting a steady payment. Yet the market's making a 5, 7, 10, 15% rate of returns.
Right.
And you are bored with this boring bond. And now a 2000 kicks in. The price to earnings ratio is 44-1. It was too high. It was a major indice. As we spoke about in the market, it's time to get out. Let's get out. Well, people didn't want to go to bonds. They were looking for the blue skies that turned into dark skies, and the market dropped from 2000 to 2002, and the market dropped. That's right. It dropped around 48%. Some mutual funds and stocks dropped even 50, 55%. But if you want that steady income, this, when you get older, could be a nice steady income, a great tool. I didn't say sell everything you have out there. Listen, make it very clear. I'm saying you need to understand, because people were not being educated on duration. They were not interested in, they were not understanding guarantees or what the companies were guaranteeing by way of paper. And they were not understanding how can I get paid. And therefore, that was put aside, hoping and praying that the market would continue to go up. And when it dropped from 2000 to 2002, from 2007 to 2009, people were nervous. They couldn't sleep, Alex. Bonds could be a great tool out of all the tools in the fixed income area. And this is one of the wonderful type of tools if you'd like to sleep well at night and get that check in the pocketbook.
Want to learn more?
609-488-4646. Please write it down. 609-488-4646. I'd love to take your questions. I've got answers. And if I don't have answers, I promise you I'll get them.
That is Scott McLean, McLean Advisory Group. Remember the website as well, financialinsanityradio.com. As we're talking today about some different tools that you need to have in your income toolbox. We're discussing corporate bonds, but on the other side, an important distinction needs to be made. We're going to be talking about corporate bonds versus bond mutual funds. This is Financial Insanity, out-of-the-box thinking for your financial sanity.
Who Who likes uncertainty? Wall Street certainly does not. With near record inflation and partisan politics, there's a lot of uncertainty right now. What will America's future look like? What will your future look like? Will your taxes go up? Will your savings go down? For more than 40 years here in the Jersey Shore area, Scott McLean and the team at McLean Advisory Group have seen uncertainty come and go. No matter what the future holds, Scott can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 609-488-4646 now to meet with Scott McLean and the team at McLean Advisory Group. If uncertainty is causing you to feel insecure, Scott McLean might be able to help. Call 609-488-4646 and schedule your visit today. Again, that's 609-488-4646.
Investment advisory services are offered through Sound Income Strategies, LLC. Investing involves risk, including the potential loss of principal.
Can we really live the go-go years, or am I going to scrimp and save and stay at home and watch TV, watch Bob Barker? I don't know.
Nothing wrong with that.
No.
We made it back. This is Financial Insanity with Scott McLean, presented by McLean Advisory Group.
Discussing the income toolbox today, building a stronger portfolio, one tool at a time. I'm Alex Dingman alongside Scott McLean of McLean Advisory Group right here in Waretown, serving Ocean County and beyond, helping you shore up your retirement future. That number, if you have questions, 609-488-4646 for Scott McLean and the team at McLean Advisory Group. As yes, we are talking about some different tools to help you generate some retirement income, discussing corporate bonds today. Very important topic, and we need to make an important distinction here, Scott. If you could talk about the critical difference as we are discussing corporate bonds, but also what a lot of people know about, maybe are invested in our bond mutual funds. What's the difference here? What do people need to know?
Let's get to basics. First of all, if you're out there and most people don't know about bonds and how they work, or maybe you have a little ideas, a bond is like a loan from a corporation. A bond is like a loan from a corporation with a set period of time called duration. So let's say it's IBM. They're going to offer a 5% bond, and it's for a 15-year period. So we know how long they have to pay that payment. Now, that's called a corporate bond. Again, we have all sorts of corporate bonds, from the risky to, of course, real conservative ones. That's called the quality of the bond. Now, let's jump over into the world of mutual funds. This is where it gets tricky. And a mutual fund bond is made up of 200 to 300 different companies in one portfolio. So you could have one bond mutual fund with 200 to 300 companies in that portfolio. Now, if you were to say, Scott, I want to have safety and security, well, my question to you out there, listen carefully. Let's say I've got a mutual fund bond portfolio that's paying a 5% dividend. And let's say I have a 10 different corporate bonds, 10 different ones, that's averaging 5%. On one hand, you're going to say, I'd love to have the diversification of 200 companies versus 10 companies. But wait, did you understand who's offering better guarantees? Let's break it down. In a corporate bond, we know how the corporation's going to pay you and how much. So each individual bond, by way of, they write it out on the bond, they have a promise. But in a mutual fund, the mutual fund manager has, again, 200 companies, well diversified, right? But wait a minute. If the market is dropping and people get scared, you're going to be caught in a mutual fund portfolio as the market is dropping. But if you're holding individual bonds, you can choose to, I'm not dropping anything. I like that steady 5%. I'd like to have that guarantee of the company paying me a monthly, or a twice a year, that payment. And I know I'm going to get that payment for a certain period of time. So I've got certainty and guarantees by the corporation. Now, I'm not guaranteeing the corporation is going to go out. I'm saying, let's take a look. So as an investor, portfolio manager of these portfolio of 200. I'm not going to talk to you, my clients out there. I'm just going to buy and sell what I need to. So when people are redeeming money, I may be selling some very good bonds just to make up the yield. But you out there, individual, you can keep these bonds. Now, let's make it, you know what? That's really deep, Alex.
Yeah.
Do you want some certainty? Individual bonds have more stability than mutual fund bonds. How about make that real simple? Why? Because we don't know when the market's dropping and you want to sell, you know what? Or you don't want to sell, but you want to enjoy that 5%. They may have to liquidate, and this loss could be a permanent loss in a mutual fund portfolio. It's just a stock of a bunch of bonds. And this is where people don't have that predictability, that accountability. They don't know what's inside of it. But when we have individual bonds, we can look at them, we can analyze them, whether we should get out or not get out. And this is a big difference when we talk about the difference between mutual funds, bonds, portfolio, and individual bond, corporate bonds.
Want to learn more?
609-488-4646. If you're stuck in the weeds, give me a call off the air, 609-488-4646. That's our studios. If we can help you, let's help you, because bonds are tremendously exciting now as interest rates are starting to go down.
No, I love it, Scott. And really, it's all about that level of risk. You know, how much risk you want to take? How much do you want to be into the stock market? And I think that conversation, too, it is a different one as you get closer to retirement, right? So maybe discuss that a little bit. As, you know, you're getting closer to retirement, maybe, depending on who you are, maybe that's the security that you're looking for.
I really don't want people to get thinking that all bonds are safe.
Right.
So I'm very nervous what I just said a little while ago, because they're based on, number one, how long you got to keep them, called duration. But on top of that, you could buy what's called high yield bonds. Now, people get excited about high yield bonds because they think, oh, I'm going to make a lot of money. Woohoo! Wait a minute. High yield bonds are the riskiest, because there are companies who have the portfolios don't look too good. Maybe they need some right guard because they're starting to smell. Maybe they need to raise money, high yield bonds. And so lately they've been absolutely just catapulting, doing wonderful, because it's hard to borrow money. But when interest rates start to drop, do you want some guarantees? Do you want to sleep well at night? Let's find a tool in the toolbox called corporate bonds, whether they're risky ones or not that risky ones. Let's understand your risk level, because everybody wants cake and ice cream, but nobody wants the calories, the extra fat. So be careful on how much risk you want, because there's several types of bonds out there people really don't understand, and they could get stuck in the muck. That's why they give us a call, and when we talk to our clients about where they want to invest their money, we call it the dreams. I want the money to come in. I want to be able to take trips. I want to go on trips and not worry about the market. And we talk about the dollars, where to invest the money, and the tools that'll give you those dreams to come true. And then if we pass money on to the children, called the dynasty, how does it pass on? Do the kids usually cash everything in at once or not? And this is the definition of really a 3D planning in your portfolios. And bonds could be a good mix as rates go down. As we just saw previously, the rates were skyrocketing. Bonds took a real they became a anvil around your neck. They were dropping like a time bomb. Now it's inverse. It could be a wonderful tool out there. So again, understanding your tools is critical, Alex. If you don't understand, call us.
Well, and no, that is a great point. And also the idea of allocation as well. I mean, Scott, could it make sense to be in a world where you have both corporate and mutual fund bonds?
It could be. Depending on the size of your portfolio, depending on the risk you want, depend on the income that you want or non-income, depending on the current markets. As we know from our previous show, we talked about the interest rates are dropping. Jerome Powell had a little conversation with us previously. And then we talk about, is rates dropping? Should we be into bonds, not bonds? And again, it goes back to the mutual fund manager who's handling it. Let's see his track or her track record, because we don't want to get caught in this ride as interest rates start to drop. Is it a short-term bond or long-term bond? Where do we go? And this is the unique tool where our firm really lights up and really does tremendously well, because we have in our back pocket 3 CFAs to make a quick phone call and to have guidance to where we should put money on a daily basis if we need it. This is really helpful to us.
Well, and Scott, it's all about creating that custom plan. I mean, you threw out the word unique, but each person is unique, and they're going to come to you, and you probably get tired of saying, well, it depends, but it really does. It depends on a person's personal situation, their income level, what they want to do in retirement, the kind of legacy they want to leave, and so. It is custom for folks. And so as we have this discussion about bonds or any other income tool we're talking about, there is no one size fits all. And that's one thing that your team gets really excited about, is somebody coming in and it's a blank canvas and you're just looking at it and saying, hey, fill me with all the knowledge so I know who you are, what you're trying to do. And then you're going to use your knowledge and your team to try to craft a plan that's going to set that person up for the most success they can have.
We have tremendous variety of people, not only for the colors of the people, the good looking or the ugly ones like me, but we have people who are married, and they're married and they start their retirement journey at age 60, some 55, some 65, some older. Maybe they have younger spouses. Maybe the one spouse is 75 and the other spouse is 60. Wow, is that a diverse journey? How do we make the money last longer? What tools should we use so the money lasts a good long time for the younger spouse? And that doesn't mean that the younger spouse is going to live out the older spouse. In addition to the ride, in the early years, it's called the go-go. You want to go, see things, enjoy life. Like my best friend, his wife is about 12 years younger than he is. And they said, Scott, my wife, I'm going to have her retire right now. He is 65 right now, and his lovely wife is younger, and they want to start doing things. Well, you know what? Their planning is going to be different than if they were both 65. Or maybe they have a certain amount of income they need to last a good long time. Or maybe they're older. Let's say another couple out there that could be both 75. Do we want to pass money on? Where do we put it in? How much do we need to pull out? How do we pass the money on so the money lasts a good long time for them? Should we put the money into an irrevocable trust to hide the money from the nursing homes? Should we put the money in a different type of account to have some more growth? I don't know. And Alex, you made a good point. We have such a diverse amount of people out there. This is exciting. What makes me excited about my field, I mean, if I can last another 20 years in this field, I just love this because everybody's so different. It's not the same old, but everybody has the go-go years, going into the slow-go years, going into the no-go years. And so things change, Alex, and I think about this. What are you out there? If you're looking at retirement, how are you looking at retirement? What are you doing? How are you setting your retirement up? Are you talking about this on an annual basis with your advisor or on a semi-annual basis? And then are you looking at tax ramifications? And then how do I preserve the assets for the next generation? Hey, if you want, give me a call at our studios. You may have questions right now. 609-488-4646. Let me say it again real slowly because I don't want you to miss out to understand how mutual fund bonds, corporate bonds, and other type of investments out there could really be beneficial at this time. 609-488-4646. And by the way, that's our website, 609-488-4646.com.
Thank you for that, Scott. And when we come back, we're going to have a guest with us, Dave Connolly, going to talk about some important things you need to know around the topic of special needs. That's on the other side. This is Financial Insanity.
Stop for a moment and think about this. Do you know how much money in your 401k or IRA is actually yours? Or will the government take a bigger chunk than you thought? Remember, you still might owe taxes on that money, but do you have a plan to help make sure you don't pay more than you should? At McLean Advisory Group, we believe you deserve to keep more of what you've earned, which is why we're here to help you navigate the confusing world of retirement taxes. It's your money. You deserve to know what's at stake. Right now, taxes are historically low, but they won't be this low forever. So call the McLean Advisory Group team today so you don't miss out on this opportunity. 609-488-4646. That's 609-488-4646. You work hard for your money, and we'll work just as hard to help you keep it. McLean Advisory Group, 609-488-4646. Investment advisory services offered through Sound Income Strategies, LLC, an SEC-registered investment advisory firm. McLean Tax Advisory Group and Sound Income Strategies are not associated entities.
Who likes uncertainty? Wall Street certainly does not. With near record inflation and partisan politics, there's a lot of uncertainty right now. What will America's future look like? What will your future look like? Will your taxes go up? Will your savings go down? For more than 40 years here in the Jersey Shore area, Scott McLean and the team at McLean Advisory Group have seen uncertainty come and go. No matter what the future holds, Scott can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 609-488-4646 now to meet with Scott McLean and the team at McLean Advisory Group. If uncertainty is causing you to feel insecure, Scott McLean might be able to help. Call 609-488-4646 and schedule your visit today. Again, that's 609-488-4646.
Investment advisory services are offered through Sound Income Strategies, LLC. Investing involves risk, including the potential loss of principal.
How much cash are we going to burn, and will you be out of money? And will the cat food train start to come alive? And that's where the rubber meets the road.
Great cat impersonation, by the way, Scott. That was spot on.
This is Financial Insanity with Scott McLean, powered by McLean Advisory Group.
It seems like nowadays everybody just goes to that cell phone, puts in the address, and then just stares at it, and it tells you exactly where to go. But I remember not that long ago traveling with my dad across the country, and he literally would pull out the map. Big old map. He'd roll through that thing. We'd be circling highways and making marks with pen, and we would get there, and it would be a lot of fun. Alex Dingman here, along with Scott McLean, McLean Advisory Group, Financial Insanity. And maybe that sounds insane to some people nowadays, Scott, to be actually using a physical map instead of just that cell phone. But we're going to talk about that retirement roadmap today. And Scott, special guest with us. Exciting here. We have an advisor who works along with you and has been in the financial industry since 2009. George Costanis is with us as well. George, thank you so much for joining us today to talk about this roadmap.
Well, thanks for having me. I appreciate being here.
Absolutely. And Scott, what kind of a traveler are you? Are you just using that cell phone now and just, really brainless about the whole activity at this point?
I am brainless. My wife and daughter always make fun of me because, Dad, why don't you remember where you're going? You're going to get Alzheimer's. You got to stop doing that, Dad. Quit using the Waze app. I said, well, it's very easy for me. And you couldn't have brought it up better, Alex, talking about using a map. I remember using a map myself when I went to Florida to college in Nyack, and the map's flipping upside down. It's blowing in the breeze. It's all over the map, and you make a wrong turn. You have to recalibrate everything you're doing again, and then you lose time, lose effort, lose energy. Then you're starting to maybe say some four-letter words you never said before, and you get upset. So, but again, by the time, like you said, a good fun retirement or a good fun road trip comes with bumps in the roads, maybe flat tire or getting lost, and there's nothing worse than getting lost. So, Alex, thanks for sharing us the Waze app. Many people are out there using the Waze app. Today, I wanted to talk about, Alex, you asked about a very important thing, which is why I brought George in as an advisor at our firm for such a long time. I call it the McWaze, the retirement McWaze. The Waze app, we'll call it McLean Waze, the McWaze, because retirement comes with a lot of challenges. I got a phone call this morning, and he said, Scotty, a guy named Ken goes to our church. He says, Scott, I just can't fill out this form to get my taxes reduced. And I said, Ken, why didn't you call us? That's, you're a tax client of ours. He said, well, I just did it myself. And how many people do things themselves, Alex? They try to do things themselves and they end up dorking it up.
Yeah.
Freaking out.
Sometimes it's hard to ask for help.
Later.
Yeah.
Yeah. And so I called the McWays. When it comes to retirement, how can we not flip the map upside down, get detoured, tire flat because with retirement, it comes with a lot of decisions.
Yeah, absolutely. And I want to hear George as well. First, that phone number, if something resonates with you, if you need help with your roadmap, 609-488-4646, 609-488-4646. And George, I know this is a great resource for folks, retirement roadmap. And talk to me a little bit about the idea here, because I know it's the kind of thing that's personal for each person that you would see that, needs help finding that direction.
Oh, sure, absolutely. And when you're going on vacation and you have a roadmap, I mean, it sure is fun sometimes getting lost or sidetracked, as some of the things Scott pointed out. But when it comes to retiring and having that retirement roadmap, it is no fun getting lost or falling into a ditch. So that's kind of the idea behind the retirement roadmap. You don't want to get lost. You don't want to fall in a ditch. You're only going to do this once.
Absolutely. And that's where you guys can step in. Scott McLean, George Costanis with McLean Advisory Group, really helping guide people through retirement, because you said it right there. You can, hey, have some detours when you're just having a nice leisure drive, but when it comes to retirement, you want to have that planning ahead of time. You know exactly where you're going. And that's where you guys can really step in to say, all right, here's the turns that need to be made. Here's the detour. Here's where there might be a construction zone, that kind of thing, so that you do not have those surprises.
Absolutely. And reducing stress, burning yourself out, having concerns, not knowing what you don't know, that's super important. So having a roadmap in front of you that outlines some of the biggest or greatest pitfalls or road bumps, then that's absolutely helpful.
I think it's also helpful, Alex, when your spouse, maybe it's the husband that does the planning or the wife does the planning. The challenge if you're listening to me right now and perhaps you're doing all the planning, but what if you get detoured, sick, disabled, Alzheimer, dementia, your wheels fall off, you go see Jesus? One of those areas are going to possibly happen, and you're leaving your spouse to the unknown, and she doesn't know how to read the map. Perhaps she needs someone, or he needs someone, to help navigate this retirement, because retirement should be the golden years, but I hear a lot of times it's the rusty years. And if you don't have a retirement game plan or a map, it could get you totally off your game. So important to have that roadmap, as George said, because it's psychological. Do I retire? When do I retire? And they're always asking me, since I'm an old bat, I love what I do. The problem is, what are you going to do psychologically first, so you don't burn out and be stressed out, and then all of a sudden left hooks come, Alex?
Yeah, absolutely. And, it's always good to make a checklist before you travel. What are some things that we need to be thinking about when it comes to this retirement roadmap? And we want to plan this out. We want to make sure that we can get there and have enough finances to make it through what we hope is to be a very long retirement. But what are some things we have to think about before we travel?
I'm going to have George go through that, Alex, real quick, because this is critical. And if you're out there listening, I'd like to get this in your hands, even though we're trying to make this journey fun. If you get sidetracked, at least you can lean on those people like ourselves who can guide you through it. So this map George is going to give you, we're going to go over to another segment, Alex. We're going to drill down deeper. But I guess I want to have George, when we look at people, when you talk to people on a weekly basis, you probably see 5-10 people a week minimum on top of servicing clients. What are the biggest things people are failing, they shouldn't fail on, they need to get in their hands to plan the retirement?
There's something definitely out there called impact bias, which sometimes when something first happens to you, it seems bigger than it really is. So I personally think it's super critical to chunk this out and take smaller steps at it. And step one is definitely to take a good inventory of what you have first. And then also where you want to be. So step one, definitely take an inventory, everything you have. This could be pension statement, 401ks, social security statement, bank statements, a list of expenses. What do you want your retirement to look like? What's it going to cost? Take that inventory first. Absolutely critical. And then we can move on to the next steps.
When you take this inventory, Alex, when we meet with people, it's almost they bring one or two things with them, not everything. And I think they don't understand that you need a real good picture. You need the entire roadmap. Well, This is not the roadmap. This is putting the roadmap together. And by putting it together, just like George said, your pension statements, your 401k, your IRA, your Social Security statements, we cannot play wing it. This is not a wing it. This is no do-over. And hopefully if we have to try to, if you're in retirement right now and you need some guidance, or maybe you're saying, am I going to run out of money? Which is the number one discussion I hear so often. Am I going to run out of money? What's going to happen? Well, we need to, again, dive deeper. We've met so many people, Alex, who've come to our office and they didn't work with us. And that's fine because we don't force people. We don't really try to beg or bug them, but we want to guide them. And so when they finally come back and they need someone to walk them through this psychological nightmare, am I going to run out of money? Is my spouse okay? Are my children okay? Can I leave something to them? These are the questions we're getting, Alex.
Yeah. And Scott, George, we just have a couple minutes left, but in those couple minutes, how can people get help with this retirement roadmap? What is that first step?
Well, first of all, is when do I want to retire? Do I want to retire? But the most important, who can I speak to ask about retirement? Who can I trust and feel? Which is why when people visit with us, Alex, just give our studios a call, 609-488-4646. Visit with us, 609-488-4646. Ask for Bonnie. They can meet with George. They can meet with myself. Both of us highly qualified. But what I'm trying to tell you is when you understand when you're going to retire or think about retiring, these dates will change. You get nervous. You're not sure. Alex, I'd like to offer anyone who would like, no cost, no begging, no bugging. If you want a game plan, we're here for you. Come in. Let's have a discussion to see if we can benefit those of you who are making this huge decision, whether you're in retirement or about to go in retirement. Don't do this alone. Let's have a discussion. Why would you deny yourself the ability to get with someone who's done this for years? Give me a call off the air, 609-488-4646. Let me see if I can help you, guide you through this many journeys in your retirement. Start getting a plan together. Get this map laid out, Alex.
And talk to me a little bit here quickly about the benefit of having this roadmap. What does that do for folks to come in and fill this information out and really be able to have a better grasp on the future?
What a great question. Personally, I think the biggest part is that most people retire once and they've never been through it. They don't know what the pitfalls are. They don't know what they don't know. Having this retirement roadmap is basically all the things that we have seen, all the issues that have come through, and it really puts together a lot of things that you possibly don't know that you don't even know that are headed at you in retirement. And it does a good job of covering some of those unknowns.
All right. Thank you, George. And again, that number, 609-488-4646. That number again, 609-488-4646. Just add a .com for the website. This is Financial Insanity. I'm Alex Dingman, alongside today Scott McLean and also George Costanis with McLean Advisory Group.
This radio program may contain information which has gone regulatory or other significant changes since its original recording. The information and views expressed on today's show is educational in nature and is not intended to be a recommendation for any specific investment, product, strategy, plan, tax, or legal advice. Information presented is believed to be factual and up to date, but we do not guarantee its accuracy. Investment advisory services offered through Sound Income Strategies, LLC, a SEC-registered investment advisory firm. McLean Advisory Group and Sound Income Strategies, LLC, are not associated entities.
This radio show is a paid placement.
Stop for a moment and think about this. Do you know how much money in your 401k or IRA is actually yours? Or will the government take a bigger chunk than you thought? Remember, you still might owe taxes on that money, but do you have a plan to help make sure you don't pay more than you should? At McLean Advisory Group, we believe you deserve to keep more of what you've earned, which is why we're here to help you navigate the confusing world of retirement taxes. It's your money. You deserve to know what's at stake. Right now, taxes are historically low, but they won't be this low forever. So call the McLean Advisory Group team today so you don't miss out on this opportunity. 609-488-4646. That's 609-488-4646. You work hard for your money, and we'll work just as hard to help you keep it. McLean Advisory Group, 609-488-4646. Investment advisory services offered through Sound Income Strategies, LLC, an SEC-registered investment advisory firm. McLean Tax Advisory Group and Sound Income Strategies are not associated entities.
Who likes uncertainty? Wall Street certainly does not. With near record inflation and partisan politics, there's a lot of uncertainty right now. What will America's future look like? What will your future look like? Will your taxes go up? Will your savings go down? For more than 40 years here in the Jersey Shore area, Scott McLean and the team at McLean Advisory Group have seen uncertainty come and go. No matter what the future holds, Scott can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 609-488-4646 now to meet with Scott McLean and the team at McLean Advisory Group. If uncertainty is causing you to feel insecure, Scott McLean might be able to help. Call 609-488-4646 and schedule your visit today. Again, that's 609-488-4646.
Investment advisory services are offered through Sound Income Strategies, LLC. Investing involves risk, including the potential loss of principal.